Hey guys, this is Drano33 here. I'm doing a bit of a different video. So this one's actually going to be about CAPSIM, as you can see from the title. Um, if you guys are taking the class right now, maybe business policy, something along those lines, you should be getting this booklet along with the instructions to do a CAPSIM simulation. So maybe you've already started the semester and you're wondering, okay, I'm not doing so well, how do I do better? This is going to kind of give you a tutorial, not of how the simulation works, but tips on doing better in it, and a little bit of help in forecasting, a little bit of help in what to invest in. It's not really meant to be like, oh, you're doing these types of problems right now, let's bounce it back. So it will help you along those lines, but it's meant to give you a strategy to kind of follow, because this is personally what I've seen with mine. I did the CAPSIM challenge along with the class, so I learned a lot that way. I ranked in the top 150 in the world, so I was really competitive in my CAPSIM challenge. We were against 5 other competitors. They were all better than our classmates, and we dominated, like by far, in our industry, but there are other students who did much better in their own. So that's kind of how I got my ranking. I do like the simulation a lot, and I learned a lot about it, especially with me and one of my other classmates. We both got involved quite a bit, so it was really fun. And alright, let's begin. So for anyone who's like in the process of it and kind of are trying to figure out what to invest in, what will help them, do a lot of the things I'm telling everyone else to do in round 1. You can do that right now pretty much, and it will help you out a ton. Okay, so round 1, the first thing you want to do is you want to invest all the way to 10 in automation for low end. Okay, so low end automation, bump that up to 10 immediately. It's going to cost about $28 million in investment, and I think your max investment is about $32 million. So still have some leeway there, but that's still a lot of money to spend. So how are you going to pay for that? Well, immediately do the max bond. That's $18,994,000. So that doesn't pay it all off, but it pays a huge chunk of it. Okay, so don't worry about it. You'll be able to be debt free by probably around 5 or 6. Usually your simulation will probably be all semester, so that'll probably be maybe 6-7 rounds. So you'll probably be debt free by the end of it. I was for mine. For doing the challenge, I was debt free by round 6. So anyways, do a max bond, get that out of there. The next thing to do is the stock. So stock, essentially, this is free money, and our teacher said that at the end of the semester too. It's basically free money. It doesn't really hurt your company all that much. You don't want to, you don't want to go over 10% of what your stock is and, give out stocks that much, but you want to keep it about 5%. He actually put a cap on ours about at 5%, and we couldn't go over that, or else he would dock us points. So we did at 5% pretty much every round. So for round 1 is $3,425,000. So that's free another $3.5 million. And the last thing you want to do to pay for it is AP lag. So bump that up to 60, and it should pay for everything. Now I don't understand why it wouldn't. It did it for ours, and we had excess cash. We had like 10 million excess cash round 1 for the challenge. So that should cover all your expenses. Even if you have a huge forecasting gap, it should pay for everything pretty much. So, just be okay with forecasting and do fine. So this round, your stock price is going to go down. If it goes up, that's amazing. If you can do 10 automation in low end and still have your stock price go up, that'll be phenomenal. You're going to take off round 2. Okay? So the next thing you want to do after, you kind of do the low end, you kind of look at those financial things. MTBF. For research and development, you want to change up some of the MTBFs. This will really help pay off some of those costs too. So traditional, bump that down to 14,000. Okay? It's a very low criteria for them, and you'd rather give that back to them in price. So drop it down to 14,000, which is bare minimum. Same with low end. Drop that down to 12,000. And low end and traditional, you're going to keep it there all the way through. Performance, you want to bump that up to 27,000. Okay, It's the easiest thing to do for performance and meet their best criteria. You don't have to work with aging things like traditional. You don't have to work with positioning it right all the time. You can just meet their best criteria in one switch and keep it there. So simple. So performance, bring it up to 27,000. The last one is size. It's only 19% of their buying criteria. So you can probably drop that down to the lowest range for the first few rounds, and then you can bump it up to be more aggressive in the later rounds, so that you can just kind of pay off some of the things. No one else is going to do this first round. It's going to help you, cut costs, increase your profit margins, and maybe have your stock price kind of break even just for one round. So, recap: MTBF 14,000, low end 12,000, performance 27,000, and size 16,000. Okay. Now for the promo and sales budgets, you want to try to. I'm saying thousands in like all the money, but it actually means millions. But you type it in as thousands. Okay. So for the promo and sales budget, you want it at 2,000 each. So that's 2 million each. Okay. Now, promo affects the awareness, while sales affects the accessibility. And what my teacher actually didn't even know, and I called up one of the CAPSIM people, and they told me about it, was accessibility plays a huge role in it. It may not seem like it affects that much, but it is phenomenal. Okay, so say you have 50% awareness for one product, and you have 50% accessibility. Okay, that means 50% are aware of your product, that it even exists. Okay, and then the accessibility 50%. That means 50% of your awareness can even buy it. So basically only 25% of the entire industry can even buy your products, while 50% no. So if you had 100 awareness and you had 100 accessibility, you would have 100% of the industry that can buy your product. If you had 50% awareness, 100% accessibility, that's still only 50% of the industry can buy it. So whatever the awareness percentage is, the accessibility goes off of that. Okay. So, it's really important to get them up as high as you can, as fast as you can. I understand round one is going to be a difficult time trying to get breaking even and stuff. So, at least for traditional, low end, high end, do 2,000 each. If you're getting really close to breaking even and you're a little bit worried, maybe cut back a little bit on performance and size. But don't cut back a lot. Okay, at least keep it over 1 million each, or 1,000 each. Okay, so that's pretty much all the basis for round one, especially because you're just trying to break even and you're just setting yourself up for the next round. You won't do great this round. Like for us, for our challenge, we dominated. We were so far ahead of everyone. We had a stock price well into the 200s. We had cumulative profits of well over 200 millions. I think it was maybe 300 million. I can't remember. But anyways, we just dominated. But round one, our stock price went down when every other company went up, all those computers. And, we were in last place. Round two, got to first place. So you'll bounce back the very next round, okay? So don't worry about it too much, but just try to break even. And you want to try to get your finance page. There's a little number at the bottom where it says December of whatever year, December 31st. You want that to be close to zero. You don't want to be in the negatives, but you want it to be like 0 to 1 million with, good forecasting. Don't just do bogus forecasting and expect it to be good. So you want to just, avoid big out, but you don't want an excess of, $10 million. So just try to break even and you'll do fine. Okay. So round two is when human resources comes into play. I know teachers can edit this, but I don't think they do. And for challenge, they had it set up the same exact way my teacher did. So I think they keep this the same, but human resources should open up in round two. This you want to invest heavily in, okay? Recruiting costs, I'm saying $5,000. So that means you're spending $5,000 for every new person, like high caliber employee you're recruiting. So you spend $5,000 for every single one. And then training hours, you want it to be 80. So every single person, every single employee, every year you're training them about 80 hours, 2 weeks. So this increases your productivity index by a lot. You have a lot less employees, and with the low-end automation, you have even less employees. The wages go up every year. This really isn't that much spending. You're spending like a little over $1 million every year, and you're saving millions. Okay, I think by round 6, we were saving every year like almost, I want to say around 8 million, but I could be wrong, could be even more, but I don't think it was less than 8 million. We were saving a ton because we invested heavily in this. Okay, you want to do this. It doesn't pay off, in the beginning, but you need to start in the beginning because it takes several years to kick in full round. So next thing is promo and sales budget again. So every segment, keep it at 2,000, and especially round 2, you want to get performance and size to 2,000 each. Okay, and when you're getting close to 100%, because it increases, a fair amount every round, it should only take a few rounds to get awareness up to 100%, and then accessibility takes a little bit longer. But there are formulas to kind of figure out exactly how much you should spend. I'm not going to go over those formulas. You can look it up. It's in here. It helps you out. So kind of do the formulas so you're not, wasting money. But once you get to 100%, as you read in the CAPSIM little Bible thing, you wanted to cut back to 1,400,000. So 1,400 for each single segment. So 1,400 in promo, 1,400 in sales. That keeps it at 100%. No less, it'll slowly go down. No more, you're wasting money. Okay. Max investment, you will have to take out another bond, probably another max bond. I did it with mine, but round 3 I didn't, so that helped. But max investment again, and you want to increase your that's for the bond, but you want to increase your capacity as much as you can. And they do have like a little max investment number. So I'm not sure what round 2 will be like. It depends on kind of where your position is, and it increases every year after that if you're doing good. So max investment should go up a little bit for you guys. So just spend as much as you can by increasing your capacity for low end. And you're going to be going 100% overtime every single round starting round 2. Guarantee it. You want to be not too aggressive with your price, but you want to have the lowest price every single round. And you probably want it to be 75 cents, $1 less than all the other competitors. That'll ensure that you're, almost selling out, if not selling out. And you don't want to sell out too much. You can see what your potential is compared to your actual in the couriers. But anyways, be somewhat aggressive, but drop down consistently every year. Don't just go from like $18 to $15. You're going to stock out and you're going to waste a ton of profits, especially because it's the biggest segment, and it will be throughout every single round. So definitely capacity for low end, and you're going to continue to do 100% overtime. And I'm talking about basically if you buy a capacity of 400, so that's 400,000, you're going to be producing 800,000 more. And the contribution margin, even at 100% overtime, will still be phenomenal. Ours went from 20-something%, like under 25% for contribution margin for low end. Round 2, we got to 58%. I think it was like 57 point something. But it was a dramatic increase. And we were just banking money. And that's what shot our stock price up. We are number 1 in the industry now. And we had tons of profits. Everything looked phenomenal. Okay. So that's kind of the recap of round 2. Looking into round 3, not much to say, nothing new. Just keep forecasting pretty well. At the end of it, I will be showing you guys kind of a better formula to use than this little capstone book tells you. It'll give you a better starting point so you can build upon that and take in other factors. But I didn't have to take out a bond my round 3 when doing these heavy investments. So we're already getting it to where we had a lot of excess money and we were able to spend more. And our low end contribution margin was 61%. So we were doing phenomenal, and it was amazing. We had so much so much money. We're already at a stock price of, I think, like, I want to say like $75 or what, maybe almost 100. But yeah, we were dramatically increasing. So nothing spectacular round 3. Round 4 is when TQM comes in, and this is like one of the biggest game changers for us. So invest a lot in TQM. You don't want to invest, you have to invest this exact number, because any less you get like no change, and any more is too much of diminishing returns. So in everything but benchmarking, it's a specific program, don't invest in benchmarking. In every other one, you want to invest 1,500. So 1,500,000. And these will give you the max bang for your buck. So you want to do that for rounds 4 and 5, 1.5 million, and then round 6 you want to do 1 million. And if you actually do the quiz on CAPSIM, which I did, because I was really interested, I didn't know what the hell TQM was, and we were in the middle of this semester not knowing much about it. So I read it, and it helped out tremendously. And obviously no one else really read it, because they were doing like weird numbers, really low numbers, or random really high number, and they were wasting money. So if you read it, it'll tell you to do exactly that, and that's exactly how you should do it. I called up the CAPSIM guy. I was like, would it be better if I did 2 million? Would that be, would that help out a lot more? And they said it's too much of diminishing returns. You'd rather spend your money elsewhere. So definitely do 1.5 million rounds 4 and 5. Round 6, you want to do 1 million. Okay. Next one you want to do is the bond. So, you don't want to do the bond. This point, you should not be doing a bond. Is what I'm trying to say. You shouldn't have had to do a bond round 3 if you did good in forecasting. It's not bad if you did, but you shouldn't need a bond, especially at this point. You should be having so much money coming in that even with back forecasting, you should be doing great. I know personally that for the challenge, not our class, but the challenge, I was doing everything but forecasting, and this friend of mine, he was doing sort of the forecasting, and he just got a job, so he was really involved in the beginning, but as a few rounds went by, he wasn't really involved in it. I was kind of doing it on my own, and I wasn't investing a lot of time into it like he was. So it was just kind of went downhill from there, and our forecasting was horrible, but we were still doing amazing just because of our low ends and our HR investments and our TQM. I mean, we were dominating while still like stocking out in random places, having too much in other segments, but low end is going to be your moneymaker. Traditional will be next. So that's kind of like the basis of how you want to be doing your investments. Let's look at forecasting real quick. So one of my group members, she designed this. She was playing with numbers forever, and she actually designed a really good formula. And we went back to every single one of our rounds, all 6 of them for our class. And following this formula, we're literally like, a few thousand off. It was extremely accurate. And that was for every single round. And we did a few with other companies, and it was pretty accurate for them too. So this is what the formula is. So you want to take your last round's total industry unit demand. It'll tell you on the courier in the segment. So it's total industry unit demand of your last round. You want to times that by the segment growth rate, which is also in the courier. And you want to times that by 1. Oh, wait. Sorry. Yeah. Anyways, once you get that number, you want to times that by last round sales. Okay? That'll give you a good forecasting point. So, last round's total industry unit demand times the segment growth rate. And the segment growth rate, that's percentage, so make that a decimal first, and then times that by your last round sales. Okay, so only 3 parts, and it's really accurate. So from there, you want to take into consideration, okay, 1, is my product better than everyone else? If not, you need to play that into effect. Is it second best, third best? If it's last, you need to lower your forecasting a little bit. another thing to take into consideration is this round I did good, but did I set myself up for next round? A lot of people will cut corners for one round and they'll come out really early in their research and development, just do really good that round. And they did, and they have like the best market share that round. And then coming the next round, that segment, they just tanked and they're like in last place. Because you need to continue to set yourself up. So that's the forecasting for that. Forecasting is the hardest thing to do in CAPSIM by far. If you're watching this video and you're already into the simulation a few rounds, you're going to completely agree with me. Forecasting is a bitch. It always will be. We always had a problem with it. Everyone said at the end of the semester too that was their biggest opportunity, because we did evaluations for our companies and our strategies. So another thing I didn't talk about yet really was research and development, besides MTBF, but I actually did a lot of the research and development for both my group and the CAPSIM challenge. And anyways, research and development, low end, obviously don't do it round one. That's a no-brainer. We actually had one in our class that did that, and everyone was laughing. But don't do low end R&D round one. You want to do it into the next rounds. Time it out, especially when you're gonna have an automation of 10. You want to time it out a little bit earlier. Have it come out late, so. I don't know what round you should do it in off the top of my head, and I don't have the couriers with me, but basically you want to have it come out in 2 years, because you're gonna have an automation of 10. It's gonna take a long time, and you want to put it down far enough to where you don't have to do it a few years, like 2 years later, because you're already going to be going at the fine cut. So definitely have it jump quite a bit, so you don't have to do it so early, and you can keep your age closer to 7 years. For high end, you want to basically come out in December every year. That's a good starting point to set yourself up. And then you can have it come out earlier in the year, so you're not going too far ahead and you're having it come out before everyone else, sort of, with a better positioning. I mean, research and development is all about balancing out your costs and how far you want it to go. Traditional is probably pretty tricky. Traditionally, you want to focus more on the age. So basically try to get the age as good as you can, and then do a really long research and development, and then just keep balancing it close to 2 years. Have it be like 1.5 years at the end of the year, and let it age all the way to 2.5. And then usually you want it to come out at the end of the year there too. So traditional is kind of a trickier one than most, because you're balancing out age more than the actual positioning, and you have to do that with positioning, so it poses like two challenges in one. Performance and size, though, they're really not that hard, because they're not much thinking. High end's a little bit more, critical thinking on how you want to position it, because it's such an aggressive segment. But yeah, traditional, focus on age, and then every now and then you have to do a big jump, and you'll kind of know what I mean when you get into it. But seriously, just follow this, and there's no way you're going to be second place in your class, because this is such a great strategy. I'm sure there are other strategies, but I find it really hard to believe that there's any other better strategy, because just one segment, the biggest segment, automation at 10, you'll literally be spending like $2 per product when you were spending like $10. I mean, your contribution margin just go through the roof. So I highly recommend following this strategy. I bet my teacher would be pretty mad if he saw this video. I hope no CAPSIM people see this too, because yeah, it feels like it's a little broken. Once you understand this, that it helps out so much that it just comes down to who's a better forecaster and that sort of thing. But okay, so I didn't talk about new products. Introducing new products, I don't recommend it. It's just, if you're doing it a second time around, then it might be a little bit better option, because there's so many factors that play into it, and if you're not too familiar with the program, the simulation, there's a lot of things that can go wrong. But if you do want to come out with a new product, One is do it over the course of 2 years. Reason being is raise your automation to the one you want, to like the point you want, and increase your capacity to 1. That's literally the 1,000 units, so just increase it to 1, okay? And then you can put automation wherever the hell you want. It's going to cost less than 50 grand. I did that I came out with the traditional product and challenge, in the CAPSIM challenge against, international challenge. Anyways, when I came out with the new product, I put capacity to 1, and I raised automation to 10 for a traditional product. That cost $47,000. Like, not like, $47 million. $47,000, not even $100,000. And then round 2, we bought up capacity a lot. Now, granted, capacity costs more depending on the automation, but automation costs more when you have a higher capacity. So you save a lot of money, and I mean, you're saving millions and millions, probably tens of millions, just doing this little strategy. So it's basically the course of 2 years, because a change in automation takes a year to affect itself. But I mean, it's a great way to get a new product. You can do if you want to do traditional, you can basically just do automation to 10 round the first round, and then the second round you can increase capacity while doing your research and development, or do a year of research and development, have it come out in like December, so you're set up for the next round. But yeah, it's a great way to come out with a new product. If you're coming out with a new product in high end, I recommend probably a 6.5 automation, no more than that. I tried 10 because I timed it to where it came out in round 4 with TQM. So I was like, oh, I can continue to do research and development with TQM effects, lowering the time. And it was too much, so I had to move it to traditional. But if you're gonna do a high end new product, don't go any higher than a 6.5 in automation. But 6.5 is actually probably a really good start. One of the computers did a 5.5, and they were doing no problem having come out really good in the year. So yeah, 6.5 shouldn't be tough at all. So that's just another thing. I wouldn't come out with a new product in performance or size. Don't even consider it. It's stupid. Anyways, I think that's pretty much it for the tips. Just real quick recap. Low end automation to 10, and then capacity every round after that. I mean max investment capacity, okay? Just keep doing max bonds for rounds 1 and 2. You probably shouldn't have to round 3. MTBF, lower it for traditional and low end, raise it for performance, lower it for size. Heavy investments in promo and sales budgets, and HR, heavy investments. TQM, heavy investments, except benchmarking. What else? Yeah, that's pretty much a quick recap right there. Forecasting, I'll say the formula real quick once more. Last round's total industry unit demand times the segment growth rate times your last round's sales. So just 3 parts right there. It's a good way to start it off and then take into those other factors. So good luck with your simulation. Feel free to message me if you have any other things. I'm sure I missed several things that I wanted to talk about, but just kind of going off the top of my head. I wrote a few notes down when I was preparing for this little video. About 30 minutes, but anyways, I hope that helped out a lot. Like I said again, comment or message me personally on YouTube, and if you have any other questions, and I'll be happy to help. And I'm no expert, but this really helped me, and we dominated against these computers who were much better than the classmates. I mean, they're phenomenal at what they do. They have set strategies, and yeah, we decimated them. So anyways, this is a great strategy just for your class. I find it really hard to believe you'll do bad, so good luck, and I'll see you on YouTube.